On behalf of Leeladhar, I welcome you all to the Jindal Saw Q4 FY18 and year-ending 2018 earnings conference call. I thank management for the opportunity. Today we have with us Mr. Neeraj Kumar, Group CEO and Whole-Time Director, Mr. Vinay Gupta, Global Head Treasury, and Mr. Narendra Mantri, Head Commercial and CFO. I now hand over the call to Mr. Neeraj Kumar for his opening remarks, followed by Q&A. Over to you, sir.
Good afternoon to all our friends and investors. Today we had our board meeting, and our apologies for starting this call about 30 minutes late. But I must thank all our investors because in a way of speaking, now probably the period of wait for Jindal Saw is over. We are beginning to show now very strong trends, and from here on, momentum should be with us. You would see a top-line growth. You would see a growth at the EBITDA level, a growth at PBT, a growth at PAT. So everywhere now we are beginning to show a very strong positive intent as far as the standalone Saw business is concerned. On the concall basis, you still get to see little overload of the subsidiaries that we have. But I must give this comfort to all our investors that it is all now a matter of past. These are just the legacy systems which are just getting carried on because part of the reorganization happened during this year, and therefore some of the overhang still continues. So let me first address the issue of subsidiaries and associates. At this point of time, in Jindal Saw, we have Italy, Abu Dhabi, and Jones, which is the inland waterway business, as the only significant subsidiary which is left with Jindal Saw. The rest of it has all been removed. In Jones, as you would see in the notes, we are now running the final leg of the arbitration. We already have got 2 interim awards totaling to 350 crores, for which money has been received, and based on the comfort from our lawyers, we are hopeful that the arbitration should give us a good result, enough to take care of all our investments. And that would be the end of Jones, because as Jindal Saw or as a PR Jindal Group, we do not wish to continue in the inland water transport business. So very soon this would all be behind us, and hopefully we would be whole even on the financial front. Turning our attention to Abu Dhabi, this year we are confident that Abu Dhabi would be posting a healthy positive result. This is based on the confidence that we have because A, the oil prices have firmed up, B, the Iraq-Syria issue seems to be getting resolved, C, there are a lot of market opportunities which are coming up. And also in Abu Dhabi, we have been able to achieve significant amount of market penetration as well as market development in terms of going to or including now countries like Vietnam, Norway, Brazil, and a good part of Eastern Europe, etc., into the market fold. So the load of subsidiaries and associates are either going to not be there or would have a positive contribution to Jindal Saw. We definitely wish to continue with the current corporate structure for Abu Dhabi because that's one of our core business. It's DI pipes, which is very much a core business, and there are synergies between our Abu Dhabi facility and Indian facility. Having said that, now if we look at Jindal Saw, all 4 divisions have shown a positive trend, and we seem to be now on a sustainable growth path. Margins have begun to improve. Financial charges is again on a like-to-like basis. If you compare just pure interest cost, there is not much change. The negative impact is largely on account of foreign exchange fluctuation. Otherwise, the results on every aspect are looking good. We have a healthy order book at this point of time, and the business model, there has been significant steps that have been taken to make the business model for Jindal Saw more robust. The loans continue to be under control. In fact, there is a definitive effort to reduce the overall indebtedness in the company. And we are adding to marginal capacity by improving our productivity, by improving some facilities, because we definitely see a good demand coming our way. The Make in India, the new steel procurement policy, the emphasis on the irrigation and water sector in India, as well as the improvement of the market condition in the Middle East, gives us enough comfort, gives us enough visibility to confidently say that yes, now from here on we should get the momentum behind us, and you would see a improvement in Jindal Saw's results quarter on quarter. So with this opening remark, let me hand over to Vinay and Narendra. I'll ask them to just walk you through some of the numbers. I'm sure all of you would have received the analysis, etc. And then we can get on to some questions. Vinay and Narendra.
Hi, good afternoon. This is Vinay Gupta. So in terms of the performance, financial performance, the company has reported total income of 7,556 crore rupees for the year ended 31st March 2018 as compared to 6,150 crore rupees in 31st March 2017. Now, one of the important point here is that in the current year, we have higher volumes in terms of pipes and pallets, number one. Number two, post-implementation of GST from July 2017, the GST portion is not part of the income. And whereas in the previous year in 2017, and of course up to 30th June also, the excise duty was part of the top line. So to that extent, in fact, there is a caveat also in the financial results that the numbers are not strictly compared because of that. But that way, if we compare between 2017 and 2018, the number would have been higher had the GST was not implemented to that extent. The EBITDA, reported EBITDA including other income in 2018 is 1,260 crore rupees as compared to 1,197 crore rupees. And the PBT is 580 crore rupees as compared to 512 crore rupees. And the PAT is 385 crore rupees as compared to 307 crore rupees. The percentage of the EBITDA and the PBT are looking lower as compared to 17, are looking lower in 2018 as compared to 17, primarily because of the higher turnover on account of higher raw material prices. And secondly, we have, as I said, like in terms of the top line, we have the higher tonnage also. The debt, if you have since the results have been relayed only recently, the debt has been as on 31st March 2018 is around 4,400 crore rupees as compared to 4,772 crore rupees in 31st December 2017. And the debt on 31st March includes the working capital loan of 2,370 crore rupees. So term loan debt is now reducing as per the repayment schedule, and this debt is overall lower as compared to December. The working capital debt would keep moving up and down in line with the execution of the orders and the top line. So with this, maybe we can go for the question answer session, and then we can explain more as per the questions asked.
Sure, thank you very much. We will now begin the question and answer session. Participants who wish to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Good evening, team, and thank you for giving me the opportunity. Congratulations, Mr. Neeraj Kumar, for your reappointment for another term. So am I audible, sir? Hello?
Yeah, you are audible.
Yeah.
Yes, okay.
Yes, sir. Sir, firstly, I would like to have the sense on the console numbers, although Mr. Kumar has deliberated on the same. Sir, but when we look at Jindal Saw as an entity on a console level, the PBT was around 230 crore, better than last year, 105 crore. But I think so, due to some higher tax provisioning, the PAT numbers were negative, because I think so that would be better explained that the current tax was 130 crore on the console part. So just to have a sense of comfort, sir, how is the console picture likely to look going forward? Because if I see that 1,200 crore is the incremental turnover that we make on the entire console part, if you segregate the console minus standalone, whereas we find that the other expenses constitute about 350 crore, that makes most of the difference to the bottom line. Because the raw material part, the employee cost, the depreciation and the finance costs are a part and parcel of whatever turnover we do. But I think so the other expenses of 350 crore make all the difference. So now, as earlier told by Neeraj sir, that the desubsidization is over, I didn't heard about we will be also having USA subsidiary also being maintained. So sir was only speaking about Italy, Abu Dhabi, and I think so the England part. So now, sir, going forward, how likely is this picture going to look like? Because at console level, मैंने सारे किए करे पे पानी फिर जाता है. That is what I would like to get. Now you wait for the answer.
Saket, and that's why, suppose now if I just take you on a pro forma 31st March 2019 basis, in the console you will see Jindal Saw. There would be most probably 0 joules, and I'm using the word most probably because we are making something which is forward-looking. In all likelihood, the arbitration process would be over. In all likelihood, we would have got the award the way the legal opinion, etc., is doing. So you would see 0 of joules definitely during this year. that makes a huge difference, or that would make a huge difference as far as the console results is concerned. The second comes Abu Dhabi. You would see a positive result. As I mentioned to you, the first 2 months, we have finished April and we have a visibility on May as far as the dispatches, the order book and everything for Abu Dhabi is concerned. And it is significantly better than what Abu Dhabi did last year during the same period. US, as you know, Jindal Tubular, which was the Mississippi company that is no longer a part of Jindal Saw. We do have in Baytown small coating units, but they all has it's a small coating unit which does job work, and it is giving a positive contribution through and through, although it is small. So basically, if you look at now sitting here, visualize 31st March 2019, you should see a very strong and robust Jindal Saw, a positive Abu Dhabi, 0 on Jones, a small contribution from US, and Italy, which this year, again, because of Abu Dhabi, we are putting a lot of effort, close to near break-even Italy. So that should be the result, or that should be the scenario that we should see going forward, and that would completely take Jindal Saw out of the issues of subsidiaries and associates and all of those, because then Jindal Saw would become a company which is purely focused on its core competency, which is pipes and pellet.
So for this year, can you give me the breakup, sir? How much was the losses from, I think, the Jindal Waterway, Jones, which is, I think, from Italy and Abu Dhabi, which are the main subsidiaries? If you could elaborate, what was the bleeding?
See, as I told you, we had a delayed board meeting. So my request would be is, why don't you just connect with the finance guys maybe on Monday morning, because they would be able to definitely share all of those details with you so that at least you have those for completeness.
Okay, sir. Where is then the stainless steel being passed into the what business kiske andar hocha hai? It is in the
this year, yeah, okay. That's a relevant question, and you should. Jindal Quality Tubular is a subsidiary of Jindal Saw. We have deliberately kept it there because there are a huge amount of synergy between the Nasik division, which is the seamless division, and the stainless steel pipes and tubes, which is under JQTL. So both of them, as a business model, there is a significant amount of synergy. This year, we expect JQTL to have a good market standing. Both our Samagoga facility as well as the Kosi facility for small dia and large dia stainless steel pipes and tubes are now operational. We have got all the necessary accreditation, certifications, EIL, etc. are all in the pipeline. So this year you should see a good seamless stainless combination presence from Jindal Saw in the market, which would be a significant advantage over the competition.
So those numbers will be standalone in the standalone numbers, or again in the console part? I missed that part.
JQTL would be a part of consolidation number because, as I said, it would remain a subsidiary of Jindal Saw.
Okay. And you have spoken about the foreign subsidiaries being Italy, Abu Dhabi, and Jones. Hello?
No, so this was Abu Dhabi, Italy, and the Jones is
the inland water business which is going to shut down. In fact, that is the one which has dragged the console number to the maximum extent, and that is going to now shut down, or that is going to become zero during the current year.
You spoke about the tubular subsidies. That's why I was asking. You spoke earlier about for Italy and Abu Dhabi and not for
You are right about it, because this year the contribution from the stainless subsidiary has not been significant either way. It is just now picking up. This year would be a full year of proper operation after all the stabilization, quality, upgradation, approvals and all of those. So it would have a positive impact definitely in the coming year, in the current year.
Okay, so just one more point. As per the listing agreement, I think so, we have taken the privilege of only giving the standalone numbers throughout the year for the 3 quarters and the final picture of the console part at the end of the year. So it's a request to the board and the members there to come up with the console picture also at least twice in a year. That means on a 6-month basis, September numbers as well as for the March, so that the investors at a large can have an understanding of where the subsidiaries performance has been there. Because as on date, if we take the 12 months number for Jindal Saw as an entity, standalone entity, we quoted EPS of 12 rupees per share. And whereas when we take the console part, we are at a red ink. So that means a lot of difference, and we are only aware of the console picture at the end of the year. That is also 45 days more later than March, as per the regulatory norms. So I think that to have a better communication with the investor base, we should, large corporates like Tata and all, every quarter they are giving the console picture. So where is the point? Why are we lagging on that front and coming up with the console picture? That also a horror story at the end of the year. So that's a very small suggestion. If you could communicate to the board and if you could get some understanding of the same, it will have a better communication with the investor base, and your investor base will grow according to that. Now coming to your this order booking position, sir, I think it is $922 million. That is what being given in the report, the investor update. What is the execution period that we can contemplate, sir?
Typically, the execution period would last 6 to 8 months because, different businesses have different kind of lead time for supply. This 922, if you see, the majority of would come from the DI and the large dia because in pellets, we always sell against cash. In seamless, typically the delivery time is shorter, maybe 6 weeks to 8 weeks. So, on an average, if you have to look at this 922, would take you, but again, Saket, take this only as a guidance and take this only as something which gives you that there is a healthy demand in the market because we keep on getting business and we keep on executing business. So, but to answer your question, this is probably a delivery over 6 to 8 months.
Right. So even for this year, on improved turnover also, our margins have not expanded. In fact, the margins have reduced. So, sir, what sort of margins are we looking out? Because you are pointing toward better volumes for us going forward for the next year. Will there is a chance of improvement in the margin also? And if yes, then in what ballpark can we contemplate that?
If you look at the margins, should improve because when there is a spurt in the raw material price, there is always a lag in before the margins can be passed on. So if you look at the steel industry started firming up Q3 and our EBITDA margin to sales or ratio of EBITDA to sales in Q3 and Q4 has already shown reasonable or a healthy improvement. So during this year, we expect margins to improve further because we would be able to pass on those increase in raw material prices to the customers. So already the trend has started and this trend should continue.
Sir, if you could give some ballpark, sir, what kind of EBIT margin or PAT margin should we look down and what kind of turnover growth are we anticipating for the next year? Just a ballpark understanding, sir. In a ballpark figure, sir, it may vary within 5% here or there. That can be for the turnover and what kind of.
I am not sure if the stock exchange rules permit me to give you number guidance or percentage guidance, but just to let you know, Q3, my EBITDA to sales was about 14.5. Q4, my EBITDA to sales is 17.5. So based on that, I would request you to do your own estimates, please.
Right. And sir, on the
Mr.
control
Kapoor, I'm
picture,
really sorry to interrupt you. Mr. Saket Kapoor, I'm really sorry, but maybe request you to return to the question queue for follow-up questions, as there are several participants waiting for their turn. Thank you. The next question is from the line of Ram Modi from Prabhudas Lilladher. Please go ahead.
Good evening, sir.
Hi, Ram.
Hi. So just a question. I was looking at your consolidated balance sheet. The borrowing figure on the consolidated balance sheet shoots, I'm just adding up the borrowing number, shoots to around 6,000 crores. And we have said into a press release on the standalone basis is 4,300 crores something. So just wanted to know where are this debt sitting in, and post the settlement of this NTPC venture with us, how will the debt on the consolidated balance sheet go down?
Okay, Ram, the consolidated debt of 6,000 crore plus includes the support from the promoters, which is continuing from 16 and 17. So if you talk about the institutional debt, so whereas on the Jindal Saw standalone, the institutional debt is 4,400, at the console level, that is close to 5,300 crore rupees only. And the balance which is the 5,300 to 6,000 something, is the support by the promoters domestically and internationally. Okay, so this debt, and this is a composition of the working capital long term. In terms of the debt, other than Jindal Saw, it is in Abu Dhabi and at Jindal ITF level. The Jindal ITF also has 200 crore rupees of bank loan. Then Jindal Quality Tubular and the rest of the small subsidiaries. So major is between Jindal ITF, Jindal Abu Dhabi and Jindal Quality Tubular. So this would add up to roughly 5,200, 5,300. That is one. Next question here is basically once the final, the Jindal ITF, the legal issue with NTPC gets sorted out. So the amount which will be received by the respective people, including Jindal Saw, obviously it will reduce the debt initially. It will reduce the working capital loan which is floating.
No, but this would be coming at the standalone level, or...
So there are amount which has been given by Jindal Saw Limited till 2017. So it will come back to Jindal Saw. This is somewhere in the range of 800-900 crore rupees, which is in the form of loan and the equity.
Loan and the equity.
Yeah, so everything will come back. So balance sheet of the Jindal IT will be distributed.
Okay, and how much is the debt on Jindal Abu Dhabi?
Jindal Abu Dhabi is close to 380 crore rupees, long-term, short-term both.
And just if you can ask, what is the terms on which we have borrowed from the promoters?
So promoters, they are subordinated debt. There is no terms. I mean, payable whenever.
Payable whenever, and the interest rate would be?
See, eventually today the promoters have funded the operations because they wanted the operations wanted the cash. And as we had said a number of times in the earlier calls, that Jindal Saw is ring fencing its cash. Okay, so in rate of interest is not important as of now because no payment of the interest and repayment of the loan is being made to the promoters as of now.
As of now, it is not, no payment
is being made. As of now, the efforts everywhere is to bring the operations to positive. These are all subordinated to the main lenders.
Subordinated to the main lender.
Correct.
Because it was a very valid question, because if we look at our consolidated and standalone, there was a huge difference. Second, in terms of how is the Abu Dhabi order book now?
Abu Dhabi order book is in the vicinity of 130,000 ton.
Okay. So that company would be at least EBITDA positive this year?
Yes, we expect this to be net positive this year.
Net positive. And how much is the stake there?
So eventually we control, it is under the management control of Jindal, but mathematically we have 37.5% there because of the local regulation.
Okay. Okay, sir. I will just come back in the queue.
Okay.
Thank you. Before we take the next question, we'd like to inform participants that in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 3 per participant. Should you have a follow-up question, we request you to rejoin the queue. The next question is from the line of Anmol Das from Stewart & Mactavish. Please go ahead.
Good evening, sir.
Good evening.
Yeah, congratulations on your good numbers. So, I had one question related to the remaining subsidiaries operational installed capacity. Can you give us some figures on that?
Okay, so basically the meaningful subsidiary which is manufacturing is Abu Dhabi.
Yeah.
Abu Dhabi facility has installed capacity of close to 300,000 tons. This facility produces ductile iron pipes.
Yeah.
Okay. Jindal IPF, which is another subsidiary, this subsidiary was in services, so there is no capacity. In any case, that the business is suspended and it is in arbitration. Then the third is Jindal Quality Tubular, that is in the stainless steel pipe business, which is roughly 20,000 tons.
Okay. Okay, sir. Thank you.
Thank you. The next question is from Vikram Sharma from Niveshaay. Please go ahead.
Hello.
Yeah. Hi.
So recently, authority makes cessation on duty of DI pipes from China. What will be the impact of that on DI pipe segment?
Can you repeat the question again? Hello? Can you repeat the question?
What will be impact from cessation of anti-dumping duty on DI pipes from China? Because we have seen very worse situation in seamless pipe segment before that.
Okay, see, the anti-dumping duty on ductile pipe is there till almost end of this calendar year. Okay, and the industry has represented to the government for continuation of the anti-dumping duty. One. Having said that, I think the duty currently is 30% plus, and in which
For now, it would be safe for you to assume that the present kind of an embargo is likely to continue one way or the other. Look at the steel policy. So now this anti-dumping duty may even get replaced by the Make in India policy, the way we have as a steel procurement policy. So yes, you may want to do some sensitivity, it is fine, but most likely scenario, we would be working with the government to try and include DI pipes along with the other iron and steel products. So everything that is applicable to them, minimum value add, etc., should apply to DI pipes as well. That may be one of the, or probably that would be the most likely scenario.
So what is total contingent liability for Jindal Saw?
Contingent liability, I don't see any significant contingent liability, but let me just have a look at the numbers, because we don't have any significant, in fact, in terms of a contingent liability or a contingent revenue, we are now very close to finishing our arbitration for GAIL. In terms of, for GAIL, we have an arbitration award in our favor, which was challenged in the High Court, and now we are likely to get an award. Hopefully it should be in our favor, and if that happens, then that would be a significant gain that we would get, which is not currently appearing in the books anywhere. So I don't see there is much of a contingent liability, but we'll come back to you. Let me just look at the numbers. In fact, Narendra, as we speak, is looking at the balance sheet to see if there are anything which is of significant nature.
And sir, in concall of Q2 and Q3, you clearly said the impact of consolidation will not be more than 10 to 15%. But there is loss in consolidated accounts.
See, as I explained to you, the loss is largely on account of Jones, which arbitration should have finished by now. The arbitrators had to just give a little bit of extension because of NTPC. So our estimate was that the arbitration would finish in the stipulated 12 to 18 months. It has gone beyond, and therefore it is just a spillover effect. You will see once the arbitration gets over, once we have the award, the impact that we were talking about would become very visible.
Okay. Hello.
Hello, yes?
Oh, okay. Thank you.
Thank you. We'll take the next question from A.M. Lodha from Sanmati Consultants.
Hello. Good evening, sir.
Yeah, hi, good evening.
Good evening, sir. I have two questions, sir. One is relating to stand-alone balance sheet. And another is related to consolidated. Now, first I am coming to the stand-alone balance sheet, sir. In current assets, I found the loans have gone up. Current assets, loans have gone up from 708 crore to 1,065 crore. In balance sheet,
those are all support. Yeah, those are incremental support provided to subsidiaries, which is primarily JITF, which would all, that's what Vinay was saying, would all come back once we have the arbitration award and the money coming from there.
Similarly, investment has also gone up from 591 crore to 648 crore, sir.
Yeah, so as I said, these are all has been done essentially to support JITF, which is the Inland Water Transport Bill.
Okay, sir. Then I am coming to consolidated. In last balance sheet, last con call, when the investors asked you, sir, about when you have written off return of the certain amount of 30 crore rupees on the sale of two ships.
Yes.
The investor has asked you whether this type of nasty surprise is still there or not. Then they say, you clearly said that you don't look at the consolidated balance sheet. You look at the standard balance sheet. Now, you have to look at the standard balance sheet. We have already closed the losses in the consolidated balance sheet. But, sir, in consolidated balance sheet, I found that your profit before this, after the operations, 105 crore, this is 229 crore. Your return of certain 96 crore something, 96 crore 21 lakhs in the consolidated balance sheet in the current year. Can you throw some light on this 90.81 crore and 5.4 crore?
No, so just hold. Let me look at the number.
Item 4. You see, sir, item profit and loss. Roman 6. Roman 6. Exceptional item and income expenses. Roman 6. Roman 4, sir. Roman 4.
Yeah, so this is exactly the same. These are all the losses which we have incurred on the sale of ships during the current year. So if you see in Q2, we had...
But it was 30 crore rupees. Now this amount is 90 crore, sir.
This is
sale of ship was 30 crore in last quarter.
Hold. We had Meenakshi Kamakshi in Jindal Saw. You are looking at, these are ships of Jones. See, you are probably mixing two things. We had two ships in Jindal Saw, which was called Meenakshi and Kamakshi, on which we incurred 30 crore or whatever losses. Because in Q2, Q3, when we were talking on a standalone basis.
Okay.
Now, this 90 crore that you are seeing is not in Jindal Saw. That time, if you recall, I had clearly said Jindal Saw has sold all its ships, no more write-offs or no more ship business in Jindal Saw. Now what you are seeing here is on a consolidated basis. This is where the
90 crore pertain to what?
to transshippers being sold out of JOLS, out of JITF.
That losses you have booked?
Yes. These are the losses which have been booked for sale of, because once you do not have that business, the inland water transport business, as I mentioned that we would not be doing going forward, then it's best to sell all of these assets. And if you have to book the losses, let's book the losses and move on. Otherwise, on an operating basis also, you would have to incur losses, and it would unnecessarily take management bandwidth, and it would unnecessarily take the time of everybody.
Sir, you go through the last con call. I remember very well, I attended the con call. I have listened the con call even after the con call was over, after downloading it. You clearly said, sir, that there will be no, investors should look at the standalone, not at consolidated. Sir, we are very...
I'm still saying that. Sir, you are only getting confused between Q2, Q3 conference call was essentially on the 30 crores as exceptional items being booked as losses in Jindal Saw, which was Meenakshi Kamakshi. Okay? Here what you are seeing is the loss on sale of ships in JITF. This is not in Jindal Saw.
How many ships are still pending to be written off, sir, in JITF subsidiary?
At this point of time, in JITF, we have a fleet of one transhipper, and then we have some barges. The barges are very, very small barges. They are not shipped. But in terms of the transhipper, there is one transhipper, which is the Vignaharta, which is now just left there. That's all. All the other transshippers, etc., everything has been sold.
Thank you, sir. Thank you very much.
Thank you. The next question is from the line of Saurabh Kapadia from India Nivesh. Please go ahead.
Thank you for the opportunity. So first thing on the pellet production. So this quarter your production was low. So any specific reason?
Could you please repeat the question, please?
Sir, on your pellet production, so this quarter the production was lower. So on overall basis, it was like lower than 1.5 million. So any specific reason?
Yeah, this quarter there was a scheduled shutdown. So that's why there is a marginal reduction in the pellet for the quarter. But otherwise, we should be operating at close to 1.5 million ton of capacity that we have.
Okay. And so in terms of the transhipper, you said you have one transhipper and few barges. So what will be the estimated write-down which will be required in JITF?
See, write-down at this point of time is very difficult to estimate because even though we do have a very favorable legal opinion, I would not like to speculate on what would be the award amount. We believe that the award amount should be such to cover for all these losses and to cover for all the investments. Now, that's our estimate, but I would not like to put a number to it because, the matter is still being deliberated at the arbitrator level.
Okay. And so, from last 2 quarters, we were not doing a job work, and again, we started the job work, so...
No, now, just hold. Now we don't do any job work. The only job work that is being done is the coating job work in our US subsidiary, which is a small business. Now, in Jindal Saw, India, we do not do, or we do not follow that job work structure. And I had earlier explained that job work structure made sense when we were in the excise duty and excise duty exemption and other regime. It was just to get a positive advantage of the structure. In the GST regime, we do not do any job work in Jindal Saw.
Oh, but OSL is for the saw pipe, it mentioned that company also executed the job work for 7,000 ton in saw pipes. So,
those are just coating job work, as I
coating
said.
Job work. Okay. And what is the forex loss in this quarter, and also what are the total loan, forex loan on the balance sheet?
The loss on this quarter just on account of foreign exchange would be in the vicinity of 25 crores or so. And
close to 700.
700?
Buyer's credit.
Buyer's credit of 700 crores. The buyer's credit, essentially now, we do not have any foreign currency term loan. All the ECB, etc. are over. The buyer's credit, which is the term loan foreign currency denominated credit, is to the tune of 700 crores.
Thank you. The next question is from Saurabh Podar from Lucky Investments.
Hi, sir. I had a question on the interest charges for the quarter. Seems the interest expense has gone from 86 crores to 125 crores. I think I must have missed your point if you've addressed it already, but was wondering why was there a significant jump in interest expense in this quarter?
Largely foreign exchange loss.
Okay, large. And, sir, second question, has our order inflow reduced this quarter? I think we were at a 1.2 million ton order book after Q3, and now we are at a 1 million ton order book. So can you just explain that dynamic? I may be understanding it wrong, so if you can just touch upon the order book.
Put the other around, I would put the other way around. In Q4, the delivery, the production has increased, the delivery has increased as happens, because Q4 is the year of the last quarter even for the government orders. So they all want to speed up and complete as much as possible in the allocated budget, and therefore it is the other way around. The production and the delivery and dispatches usually goes up in Q4. Order book, there is no problem. There is a very healthy pipeline, and very soon you will see that the order book would reach those levels immediately.
Certainly, sir. And just in the terms of macro environment, can you tell us if there are any active bids from the government and maybe GAIL or any of these government projects? Maybe
there are many. In fact, government, GAIL is coming up with a big tender, and there are a few significant water projects also around the... So at this point of time, the business horizon is looking healthy.
Definitely, sir. And just last quick question, sir. For the pipe business, can you touch upon the EBITDA? Can you give the EBITDA per ton number for the quarter and for the year for the pipes business only?
Okay, just I'll have to request you to repeat the question, but I have just before that, one of the investors or one of the friends had asked a question about contingent liability. Jindal Saw has a contingent liability of 27 crores at this point of time, and we do not see any significant risk on those contingent liability that we have. That's around 27 crores. Yeah, now you may want to repeat your question, please.
So just wanted to ask you for the EBITDA per ton numbers for the year, for the pipes business only, for the year and for this quarter.
EBITDA per ton. For the year is 9,000 rupees, and you should see this improving a bit.
Definitely. And for this quarter, sir, for Q4?
For this quarter, I don't have the number in front of me, but as I said, typically we should be inching higher than, because for FY17, the EBITDA per ton was close to 10,000.
Okay.
For FY18, it is 9,000. But as I said, there was a spurt in raw material prices in Q3, Q4, so the EBITDA to sales in Q3 was low. Things are beginning to look up, so I would expect them to move higher than the 9,000 that we achieved for this year.
Thank you, sir. Thank you so much.
Thank you. The next question is from Manish Bhandari from Valium Capital. Please go ahead.
Hi, good evening. Sir, I have 2-3 questions. One is, what will be the capital employed in the Abu Dhabi business?
Abu Dhabi business would have a total capital employed of close to $100 million.
$100 million.
Yeah,
so
that includes
I appreciate that. And you have been saying that you should see a positive contribution on a net level. So
yes.
Is there any sense that assuming that you get a reasonably good price for your Abu Dhabi asset, so you could liquidate that asset in interest of better return on capital employed for your overall business?
I don't think we should be discussing a question of that strategic nature on a call like this. Because that depends on who comes and what. Because probably it should suffice to say that our DI business in Abu Dhabi is one of our core business, because we do a lot of DI business here as well.
Okay.
We do see a synergy between our India DI business and Abu Dhabi DI business. And I think that should suffice, and that should give you an answer.
No, sir, I appreciate that, but my question was related to the capital employed, return on capital employed. So would you have any threshold for return on capital employed in your Abu Dhabi business?
Oh, for all businesses, we have a threshold on what we expect our equity return, what we expect as, everywhere we have our thresholds.
And you think so in next 2-3 years?
Yes, we are benchmarking the performance of every business against some of those, the benchmarks that we have.
Sure. So you mean to say that you would be happy enough to see through that the Abu Dhabi business gets a reasonable return on capital employed over your cost of capital in next 2-3 years, and you would be hopeful on that?
Yeah. That's what we are all working towards. That's why I told you that we have developed
Sure.
We have developed a double chamber pipe. We have developed insulated pipe. The idea is to address the European market, is only to improve the profitability, and to that's a constant endeavor that we have.
Sure. Sir, one, I think Mr. Vinay mentioned about the total possibility of recovering 800 crores as a share of Jindal Saw from our arbitration level, assuming it goes in our favor. So all the cost what we have incurred on the losses of the transhipper ideally should get adjusted to that 800 crore of the amount what we would receive. Am I right in my assessment?
Yes, and since the matter is with the arbitrator and it is in arbitration, we are running the final leg. Let me make sure that all of you get the records straight. All our claim put together amounts to 2,000 crores. We have a favorable opinion from our lawyer, but since the matter is sub judice, we would not like to put a figure on what would be the award amount. However, it is important to mention that we have received 350 crores cash as interim award so far in this arbitration.
Thank you very much. The next question is from Anshuman Bhatri from ICRA. Please go ahead.
Yeah. Hi, sir. In your opening remark, you mentioned about the CAPEX. So just wanted to understand in which division we are planning to incur the CAPEX and what would be the quantum of CAPEX and the incremental capacity we are expecting.
This year, so far, what we have as CAPEX would be all normal and marginal. So I don't think at this point of time, as per the estimate, it would be about 100 to 150 crores, and all would come through internal accruals. So that is all that is being planned at this point of time in the various facilities that we have. I must say, we had planned for the steel plant at Bhilwara, which was put on hold. Things are beginning to improve. Things are beginning to look up. But we have not yet taken a final view on what to do with the CAPEX. So again, so that all of you get absolute clarity on this, barring the steel plant, which is not announced. We have not broken the ground. We have not done anything as yet. We don't expect the other capex to go beyond 150 crores or so during the year.
Okay. Thank you, sir.
Thank you. Due to time constraints, we'll take that as the last question. I would now like to hand the conference back to the management for closing comments.
I must take this opportunity to thank all our investors. I know last 2-3 years have been where a lot of kind of changes have been taking place on account of reorganization, different businesses, subsidiaries. This time also, if we notice, the more questions or probably a significant part of the call was devoted to the associates and subsidiaries. But as I mentioned, now going ahead, we have a clear path for Jindal Saw, and definitely during the current year, whatever issues that we have with our associates and subsidiaries should get settled. And I have to thank everybody for being with us. And we do assure all of you that we do have a visibility and we do have now momentum behind us. Thank you all very much.